Good afternoon, everybody. Scott Riley, the Market Update Desk, NMLS number 157524 with Mortgage One. Had an awesome World Series game last night. Toronto Blue Jays took the lead in the World Series 3-2, and it showed what professional hitters can do, not worrying about home runs. Tigers, just a note, you should be taking notes on how the Blue Jays hitters treated each at bat. You'd learn something. Now, yesterday we had the Fed cut the Fed funds rate. Now, remember, that's not mortgage rates, by a 0.25%. Now, within the voting, it was not unanimous. Fed member Miran dissented because he wanted a 0.5 point cut, while Schmidt dissented because he thought there should not be a cut at all. The Fed also announced that they're stopping their balance sheet runoff, which on its face should have been a good thing for bonds. However, they said that they would reinvest the runoff from mortgage backed securities into treasury bills as opposed to what we were hoping for of overall treasuries. This means that they will not be reinvesting mortgage backed security runoff into longer dated treasuries like the 10-year, which would have helped longer term mortgage rates directly, but rather treasuries with maturities of 1 year or less. The market, it appears on its face, has not figured out yet that Secretary Bessent could help this balance by issuing more short-term debt and less long-term debt. That would be our help there. Now, the Treasury runoff will be reinvested back into like-term maturity assets of what is running off the balance sheet, which can be all on the long side of the yield curve. Now, during the press conference, Chairman Powell sounded, unfortunately, like he has the last few times, very hawkish, and that sent yields higher. When asked about the December 10 rate cut, he said that it was not, quote, a foregone conclusion, far from it, unquote. Now, the tone and the way he answered that question, along with Schmidt's dissent, put a hawkish tone on the rate cut. We also believe Powell's comments mean that if the Fed doesn't receive more hard data before the next meeting, they will not be cutting rates again. And with the shutdown, we don't know when we're going to get that information. Once the shutdown ends, keep in mind, reports are not going to be released and available immediately, as the shutdown has impacted the period of time when they collect the data, which still has to be all done. So there's going to be a significant lag period. So that's why our concern was that we're going to have upward pressure on mortgage rates and treasuries after the Fed announcement was yesterday. So we were spot on that. Now, in other information, apartment lists released their national rent report. Showed that new rents decreased, very good news there for inflation, decreased by 0.8% in October, marking the third straight monthly decline. They said that it's likely rents will continue to decelerate modestly to close out the year. Now, year over year, rents are down 0.9%. One of the reasons for that decline in rent prices is vacancy rates. Now, that has risen to 7.2%. That's a new peak since they started tracking this metric in 2017. Now, on the technical side, well, actually, go back to rents. This is going to continue to help us as we go forward with shelter costs in CPI and also PCE. So this is good forward information that we'll get. We just know that it does have a significant lag time from when this data comes out to when it flows through those data reports. On the technical side, mortgage-backed securities moved much lower in their range, and they're now testing support at the 25-day moving average. If we break through this, the next stop's the 50-day moving average, which is about 14 basis points lower than where we are right now. In stocks, we see the Dow is up year to date a very large amount, 5,453 points year to date. Now, we're on the tail end of earnings season. Yesterday, we showed Eli Lilly blew out earnings by 12%. That's a big beat on their numbers. We saw Google, which parent companies, Alphabet, also have a significant beat on their earnings, along with Microsoft. Now, interesting thing the other day is we read NVIDIA is approaching the $5 trillion valuation. They're not too far from it. So that's an amazing number to think. Look back 4 years ago on what that stock was worth compared to now, and it's an amazing ascent. So that's what's going on today. We'll keep up to date with everything. Give us a call. We'll help get you pre-approved, help you understand what's going on in the market and why it's going on, and talk to you about how we can help with offers being accepted with our reputation and our network of realtor partners out there. 616-293-2189, the Market Update Desk, your original singular market news source for West Michigan. Thanks so much and have a wonderful afternoon, everybody.